Hello investors, another day, another big gainer. So we have Torchlight Energy Resources, which we've talked about in our previous videos. If we take a look right here, this year in 2021, it went from about 70 cents per share to highs here on February 16th at about 500+% gains just in a matter of 2 months. So over 500% gains on this penny stock. And if you guys don't want to miss out on runners like this, stick around on this channel and let's get into 4 top energy stocks to watch for the rest of March. Let's dive on in and check them on out, guys. So the first penny stock on our list is going to be Kosmos Energy Ltd. So this one, shares of Kosmos have steadily climbed for the better part of the last 4 months. In that time, KOS stock climbed from around $1 highs to this month $3.69, all the while riding its 50-day moving average as a level of support. This week, shares of the oil and gas penny stock bounced off of this technical level again and now have broken back above this $3 mark. This move also comes on the heels of the bullish analyst actions. Johnson Rice upgraded Kosmos from hold to accumulate. The firm also bumped its price target from, up to $4.50 from $4, and Goldman Sachs also adjusted its price target on KOS stock. Originally, it was $4.50. It this week has moved it up to about $5. Currently, the bank has a buy on Kosmos. Now, in its Q4, full year 2020 earnings, the company reiterated its focus on building upon its operational momentum in 2021. This included a ramp up in a phase 1 activity for its Torchlight project to reach 80% completion by the end of the year. The company also said it will emphasize a commitment to sustainability during the year by publishing its first climate risk and resilience report. The ultimate goal is to become carbon neutral for Scope 1 and Scope 2 emissions by 2030, with a clear focus on clean energy and carbon neutrality by the Biden administration. Companies like Kosmos are working diligently to get ahead of the dynamic shift within the energy industry. So let's take a look at this one, guys. This is going to be ticker symbol KOS, and this one was up about 10.73% today, so about 10% or about 34 cents. Currently trading at $3.51. Short term, it's a little bit bearish, but midterm and long term, very bullish by the analysts. If we take a look at this one, like we said with the previous ones, it's been booming since about November when Biden got elected. We see a huge move right here. Volume started to pick up as well. We went from 99 cents all the way to highs up here of $3.69 in a matter of 3 or 4 months, which is a huge gain on this penny stock as well. Average volume every single day is between 5 and 10 million shares traded, which is another big thing. And I think to take into account with this one is even now when the market pulled back and we had that pullback for a few weeks, this stock did not really budge. It continued to stay, leveled or continue even higher. Now we are actually at the previous resistance level right here, and now we're going to be looking forward to breaking through this resistance and then making new 52-week highs. Our price target for KOS is going to be about $5 per share for the rest of 2021. Let me know in the comments below. What do you guys think about this one? What is your price target? And as always, guys, I appreciate each and one of you that support the channel, so go ahead and smash that like button. Let's aim for 150 plus likes in the first 24 hours of this video being up. I know you guys can do it, so I'm going to challenge you guys. Subscribe to the channel, turn on that bell notification so you get notified every time we make a new video. If you guys want to sign up for Webull, there's going to be a link in the description. Get your 2 free stocks valued at up to $1,800. The second energy penny stock on the list is going to be ENGlobal Corporation, ticker symbol ENG. This stock has continued to rally into Thursday. This move comes as a warm welcome from traders who've been, looking at ENG slide over the last couple of months. On February 10th, the energy penny stock traded at nearly $9 per share. With the market meltdown over the last few weeks, shares slid as low as $3.61. Since then, however, ENG stock has steadily climbed back, which is good. This week, ENG Global reported its fiscal 2020 performance results. The company posted a net loss of $625,000, equating to a loss of about 2 cents per share. This was on a revenue of $64,449,000. The year prior, ENG Global reported a net loss of about $1,466,000, equating to a loss of about 5 cents. On revenue of about $56,446,000. These results demonstrated a strong improvement year over year, even in the light of the pandemic. Now, newly appointed CEO Mark Hess commented, during the later half of 2020, many businesses were shut down, airlines were not flying, and the demand for many of our clients' products dwindled. Consequently, our business development efforts in many of our markets were severely hampered. Our backlog suffered as a result, and we ended the year at about 24 million. Our focus the first part of this year is going to be to rebuild and backlog as quickly as possible, and we are investing heavily in our business development efforts to accomplish this goal. With this in mind and the tailwind of bullish oil, ENG has benefited from the recent surge in oil and gas prices. Let's take a look. This one was a huge runner today, guys. Huge gainer. $2 almost up today. 43.81%. Ticker symbol ENG, currently trading at $6.50. So it actually got out of that penny stock range a little bit higher actually, but that's okay. We're still going to add it to the list. So this one right here, since Biden won the presidency, it was trading at around $1, went all the way up to highs of about, $9-10 up there. So that's about a 900% plus gain actually, which is even better than the one we showed in the beginning of the video. And it continued to go higher and then pulled back down obviously with the market. So pretty much the stock went in half. It went from about $9 all the way down to about $4.50, which was crazy. If you take a look, that was a huge, 50% loss on this penny stock. Volume was very low too. It was only trading at around 1 or 2 million shares daily, which is, horrible to see. Volume very low. The stock continued to trend on down, but we see this bounce. It bounced off of this area at around $3.60. That was the low that we hit. So we've already made, about 60-70% gains from that area as we're trading at $6.50 today. And today it was up about 43-44%, which is huge for this one. So what we're going to be looking forward with this one is for it to continue to trend on up as oil rises as well. And it's currently at $6.50 like we said. So this one could easily get back to the $9, $10 range in 2021 as long as the reopening of the economy continues and stuff starts to reopen back up. Companies will benefit from that, especially ENG. The third energy penny stock is going to be Denison Mines Corp. So shifting the focus to oil and gas alternatives, nuclear power has received its shares of attention thanks to the Biden administration. His climate change budget involves spending on things like nuclear power and other carbon-free energy. Industry supporters also advocate for the importance of nuclear in the energy grid. Even with recent growth in the wind and solar power, nuclear energy still provides more carbon-free electricity nationwide than all other sources combined. According to the report authorized by the Nuclear Innovation Alliance and the Partnership for Global Security, Denison Mines fits into the arena as a uranium mining company. This month, the company reported its 2020 results, highlighting a year of significant project and company de-risking. The main focus has been on utilizing its recovery method to extract high-grade deposits more efficiently. This year, the company restarted the formal EA process for Wheeler. This marked the completion of temporary suspension announced last March. While there's still a long, road ahead, the progress made in 2020 could benefit Denison in 2021. David Cates, president and CEO, explained further that Denison is uniquely positioned as well-capitalized uranium developer with multiple low-cost assets at a time when the uranium market is showing signs of incremental improvement, underpinned by growing calls for nuclear energy to re-emerge as a leading technology important to a sustainable global energy transition. With more focus on alternatives and low non-carbon emission nuclear power, and the companies supplying raw materials could become a mainstay in the market discussion. So let's take a look, guys. Ticker symbol DNN. It was up about 5.5% today. Volume was around 13.5 million shares traded, which is pretty decent volume right there, actually. And this one right here was up about, like we said, 5%, trading at $1.04. This one, once again, has been booming since the November time period for 35 cents all the way to highs here of about $1.80 actually, which is huge if you think about it. That's over a 500% gain plus. And then we obviously saw the market sell off as the tech sector pulled everything back, and it continued to go down all the way to about 90 cents, a dollar right here in February. And now obviously we're trying to consolidate right here, build up a new support level around this $1 area. If we can do that, build up some more, volume, as volume was actually very, very high throughout February. We were trading, 150 million shares, 200 million shares. And then obviously as the market started to tank, we started to get about 50, 60 million shares traded. So volume definitely decreased. And now we're very low at about, 10 million shares traded per day, or average around that area. So what we're going to be looking forward to, like we said, is consolidation, build up a support level around this $1 area, and then bounce on higher. If we can break through that, $2 area, I think we can definitely get through it in 2021 or higher. So we're going to give it a $2 price target for the rest of 2021. And last but not least, the big winner is going to be Torchlight Energy Resources. That's going to be our number 4 pick. Another thing that oil and gas companies have done is either expand into green alternative energy or aim for the M&A activities altogether. To this end, Torchlight has taken up the latter in a multi-month merger process that could see it combined with Meta Material Inc. Meta develop high-performance materials and non-composite products used in things like solar energy and auto applications. Torchlight was a fully operational oil and gas company before this merger. The company focused on developing oil fields. Should this merger become effective, Meta will prevail as the operating company. Ever since the deal was made public, traders have speculated on its completion. Along the way, the company has shed assets, slashed its debt burden, and raised capital to contribute to metamaterial loans. Now, most recently, Torchlight loaned $10 million to Meta, evidenced by an unsecured convertible promissory note. If the arrangement agreement is terminated or expires without the completion of the arrangement, Torchlight will have the right to convert all or any portion of the principal amount and any accrued but unpaid interest into the common shares of Meta. However, as it stands right now, sentiment suggests that the market expects a firm closing in this transaction. At the end of the day, time will tell, but until then, speculation has helped drive market momentum in the former oil and gas penny stock. So this one, ticker symbol TRCH, it was up about 20.35% today, or about 46 cents, trading at $2.72, and then we see it after hours another 18.75%. So 0.51 cents, currently trading at $3.23 at the close after hours. Midterm, long term, very bullish. And then, like we said, I mean, if we take a look right here, when Biden became president, it was trading at 29 cents. And then we hit highs here of about $4.83. That's over 1,000% gain plus. It's around like 1,200, 1,300% high or higher that it actually made. And then obviously as the market sold off, it sold off as well. But still, it bounced off of this previous resistance area. One thing we always talk about is previous resistance areas become new support levels and create new support levels that we can bounce off of and continue on up. Now with this one, it hit that $2 level. Stayed around there. Now it looks like it's going to consolidate a little bit higher. Volume has been around 10 to 20 million shares per day, which is another good thing. So we're going to be looking for more consolidation and to start, filling up this gap. Now, after hours, it did get all the way up to about $3. So we're going to be looking forward to from this $3 area to the $4.50 area. Once it breaks through that $4.50 52-week high, it can continue to go higher and higher. We're going to give this one a price target of $6 per share, especially as we have speculation going with the merger. That could definitely drive prices to go even higher as they were doing in mid-February. So we're going to be looking forward to this one and see what it does for the rest of 2021 and to see if this merger is going to happen or not. Let me know in the comments below. What do you guys think about Torch? All right, guys. So none of this is going to be financial advice. Obviously, this is just for educational purposes. Before investing into any stocks, especially penny stocks, speak to your financial advisor and do your own due diligence. I hope you guys enjoyed this list. If you did, leave a comment below. Let me know if any of these are on your watch list and what penny stocks are on your watch list. And as always, thank you guys for all the support on the channel. Subscribe to the channel, smash that like button for me, and make sure you check out all my other content so you don't miss out big gainers like we've been talking about lately. We've had a lot of huge runners, 500%, 300%, even over 1,000% on some of them like BNGO and many others. So stick around, and I hope to see you guys in the next one. Goodbye.